So on Friday, we saw Bitcoin drop back below $23,000. That's a level that I mentioned all last week. That was the must hold level for buyers. Okay, we wanted to see Bitcoin stay above that level on a daily closing basis, and it failed on Friday. So what does that mean for the week ahead as we head into FOMC? So I'm going to explain all of that in today's video. I'll share my thoughts on where I think this market's going, as well as what tends to happen with FOMC leading up to the event, as well as the event itself. Okay, so you're not going to want to miss that. And if you guys are enjoying this content, be sure to subscribe to the channel and click that bell icon to get notifications so that you don't miss out. So typically I don't put out videos on Saturdays, but I missed the one on Friday, so I'm making up for that. All right, so looking at Bitcoin here, we saw the market close below $23,000 yesterday. And if you saw my recent videos from earlier in the week, this was really the must hold level for buyers. We wanted to see Bitcoin hold above this ever since this close back here. Okay, so we got the close above this level, which really was a confluence of resistance at the time, and it did flip to support. Okay, so you can see the consolidation back here, the top of this channel that intersects right here at 23. Okay, now the market did hold above this for several days, and you can even see where we got a pretty decent bullish rejection from this candle. And this is where I mentioned that everybody was getting bearish at support. All right, now the purpose of that video was not to say that Bitcoin was just going to rocket higher, but more that anybody who was trying to short this candle, okay, likely got stopped out during this late day rally. All right, so, it's important to wait for the daily close in this case to either confirm a level as support or resistance. So in this case, this is a perfect example. You can see we had the close above and it flipped to support. Okay, support on this candle and even support on the very next candle. Now, yesterday on Friday, we got the close back below 23. Okay, so, close below 23,000. Look at today's high. If we look at this high, it comes in at $23,002. Okay, so right on the mark, $2 above $23,000. You can see this is exactly where Bitcoin sold off today. And the reason for that is because Friday closed back below it. Okay, so you can see what's happening here. Now, right now, markets are very, very sideways. You can see it too from the total crypto market cap. If we go here to the daily chart, you can see that all of last week, the market was just sideways, okay? And it's still just sideways. So this is important to understand as we head into the weekend, which are notoriously bad for trading because volume does dry up. And also next week's FOMC on Wednesday. That is a very volatile inducing event. So you're not going to want to be trading, immediately before that event, just because we are likely to see wild swings in either direction. So when we look at something like total in the 4-hour time frame, you can see where the market has broken below this short-term trend line here. You can see off of the closing price back here, and the market just closed below this. Okay, so this area up around $1 trillion is now likely to serve as resistance. Once again, though, it is the weekend, so expect choppy price action, and a lot of times key levels don't tend to hold all that well on weekends, so keep that in mind. But for total, really, we're looking at this area down here between 940 and 960. Okay, so this is going to be kind of the must hold for this market on a daily closing basis. All right, so as we head into next week with FOMC, this is the must hold level for total. Now, what I think could happen here for the crypto market as we head into FOMC, a lot of times FOMC tends to be a reversal event. All right, not all the time, but I would say, the majority of the time, those events tend to mark either a top or a bottom in the market. Now, I'm not talking about a macro top or bottom, but short term for a few weeks, it does tend to serve as a reversal point. Okay, so if we see the market continue to sell off into Wednesday's FOMC, that's something to keep in mind. Okay, that could be a tell for the way the market's going to react after FOMC. Now, another thing about FOMC is that a lot of times, I would say 8 out of 10 times, the initial reaction from the market is wrong. Okay, so at 2 p.m. Eastern on Wednesday and 2:30 p.m. Eastern on Wednesday, between the Fed rate decision and the Fed press conference, okay, when Powell speaks, a lot of times during that window between 2 and 2:30, or let's say 2 and 3 p.m. Eastern, you get an initial reaction from the market. Now, as I said, 8 out of 10 times, I would say, that initial reaction is wrong. Okay, it tends to be a fake out. So if we see the market continue to slide lower into Wednesday, and then we get an initial sell-off immediately after that rate decision and the press conference at 2:30, then there is a chance that serves as a reversal where a few hours later we get the market moving higher and we get a bullish reversal from that day. Okay. Now, not a guarantee, but something to keep in mind. Now, obviously, if we see the market rally into resistance leading up to FOMC, then it could serve as the opposite, right? We could get a bearish reversal from that day. And the reason this happens is pretty simple. So the larger players out there, the whales and institutions, are the ones who move the market. And those guys are not going to be trading leading up to FOMC, and they're certainly not trading at FOMC at 2 p.m. Eastern or 2:30 p.m. Eastern. They're going to wait until after the event. So it's mostly retail that is trading right before FOMC. So institutional volume tends to decrease as we move into Wednesday, and it's all just a retail show. Okay. And that's why you a lot of times get a reversal from those events, because institutions know better than to trade right before those events. They're waiting to see how the market reacts, like what I just told you, before they act. Okay. So that's important to keep in mind. So, once again, I think for Bitcoin right now, 23 is going to be resistance moving forward until we get a close back above this. And key support down here for BTC is going to be 21,600. All right, so you can see very clearly through here, this is going to be a big support area for Bitcoin that likely coincides with total and this area down here around 960. Okay, so the market could dip a little bit below this. Keep in mind that 940 is actually a fib confluence as well. So you're going to want to keep an eye on this general area for total, anywhere between 940 and $960 billion. So I'm going to leave you with this, okay? And this is just speculation on my part because I don't know what's going to happen leading up to FOMC. I don't know what the Fed is going to do, and I don't know how the market is going to react, okay? These are things that nobody knows, but trading is never about knowing what's going to happen. It's about having a plan for either scenario and then reacting to however the market, reacts to an event like FOMC. Okay, so I have a plan for both scenarios, but in my gut, what I'm thinking could happen is we get a sell-off into FOMC, like we're seeing some breakdowns here over the past 24 hours. And, like I mentioned, total is breaking below this short-term trend line. So if we were to see the market just kind of slide lower into the 27th over here, which is when FOMC is, and just kind of slide lower, maybe bounce around a little bit and then come down here and test support into FOMC, I'm thinking that FOMC could mark a potential local bottom for the market. Okay. Now there's a lot of things that have to happen for that. And one of them being that I want to see a sell-off immediately at, 2 and 2:30 p.m. Eastern on Wednesday to really get that flush and that initial reaction from the market, which, as I said, tends to be wrong. And then we could see a bullish reversal from that. Okay. Now, again, all of this depends on the market moving lower into FOMC. If the market just goes sideways or even rallies, then that changes the whole equation. Okay. But, my gut says that we could see the market continue to weaken, sell off into FOMC because the market is expecting the worst. And remember, it's mostly retail as we get closer to FOMC. Okay. So the market's going to expect the worst, continue to sell off. We get that initial bearish reaction from FOMC and then a potential bullish reversal from that event later in the day. All right. So something to keep in mind. Of course, things can change, but as of right now, I do think my gut says that is something that's likely. All right. So hope the video helped. I'm going to go ahead and enjoy my Saturday. Hope you do the same. And if you did enjoy the content, be sure to subscribe to the channel, smash that like button, and don't forget to leave your comment below. And furthermore, there is a link in the description for a 7-day free trial to Crypto Academy. So you're going to get the daily newsletter, videos just like this one every single day, where I cover 4 to 6 different markets and also access to the private Discord. All right. I will talk to you guys again next week.